base is going to improve. It is a win for business people, where for the importers and exporters, in case of a loss, you will be paid promptly. And even when you look at the computations, you realize that what you are being charged before, the shippers or the importers, when you are buying goods from outside the country, Uganda revenue millions, and that is what we have now. The total cost of these goods, by the time you have them in your warehouse or in your shop, there will be 166 million, thereabout. Now, if you are importing like metals, steels, bars, and things in that category, you realize that the same formula is applied and the same percentages indeed do apply. Again, you will have goods of 166 millions. Now, when we look at the other example, where we have insurance, and we are looking at clothing, which is worthy 100 millions, the rate, the single rate which Uganda Insurers Association or the consortium is charging is 0.3%. And when you apply that, it means that your basic premiums for the goods worthy 100 millions, you'll be only paying 300,000 Uganda shillings. And these are the goods. Then after that, then you are paying a training levy of 1,500. You'll pay VAT, which is 54,270, and you'll pay stamp duty, which is 35,000. The total payment will be 390,770,000. For the second example I gave of metals, the rate applicable is 0.185%. So you'll pay 185,000 as premiums. You'll pay 925 as training levy. VAT will be 33,467, and stamp duty will be 35,000, which is standard. So the amounts which will be additional will be 254,392. If we are to go ahead and see the implication of insurance to our business vis-a-vis without insurance. Now you will see that if you are importing and you are applying the actual insurance cost, the one I already showed you, your goods are 100 millions. Now with CIF, because the I, we have already looked at it, coming to 390,770. So the CIF value, which URA must use, will be 100,390,770. Using that figure, the import duty, which government will take, will be 35,136,770. VAT is there. And now look at the final total cost with insurance. Look at the final cost with insurance is 165,943, 165 millions. This is now how much you'll have incurred at the end of it all. 165,945,943. However, I want to remind you that without insurance, the cost you are paying, the cost of your goods was 165,953,000. Now, looking at the second one of metals, and these are the things according to the figures which we have at URA, these are the things we majorly import. Look at the 100. The cost I already told you will be 100 for insurance will be 254. So the CIF value will be 100, 254, 392. And when you look at the final effect, the goods by the time they reach you with insurance, and I want to emphasize here, you have insurance. In case of anything happening on your goods, you will be paid, you will be compensated. But the total effect is 165,720,509. But just to remind you, when we didn't have insurance, it was 165,953,000. Ladies and gentlemen, this is already showing us, when you look at that analysis of the net effect, you see that for those importing goods, you'll be saving about 7,000. Those importing metals, you'll be saving about 232,000. What we need to do, ladies and gentlemen, as I conclude, is to ensure that we embrace insurance, because it is a win-win situation for all of us. We have already seen that even the taxes you'll be paying will be less. But fundamentally and most critical is that you will have cover. You'll have an insurance cover. In case of anything, you can quickly walk to the insurance company and also claim. If anybody you feel is not doing what you and you agreed they should do, the Insurance Regulatory Authority remains widely open to receive any of your concerns, and we will address them. I want to say that it is a win-win for all of us. It is in line with the Build Uganda, Buy Uganda, Build Uganda. And indeed, when this money remains here, many things will accrue to you. You are the people who are selling metals or the bars. You are the people who are selling the cement. You are the people who sell iron sheets. You are the people who sell each and everything. When the people in Uganda get more money, they will indeed inject it back in you. I want to also undertake that the Insurance Regulatory Authority, Uganda Revenue Authority, Uganda Insurers Association are all ready to make sure that this process is seamless. And when you visit the website, you realize that it is a very quick way to do it. I want to thank each one of you who has indeed participated in seeing that we actualize this. I want to encourage the importers, our dear importers. It is critical that we embrace this to the fullest, because it is to our own good. I want to thank you for listening to me. I want to say that we hope by the end of this session that everybody will be on board. Thank you very much.
1st July, all inbound cargo is required to have local marine cargo insurance. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your marine cargo insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And you have your policy sent to you via email. Mweze Mali. This message is brought to you by the Uganda Insurers Association. By Uganda, Build Uganda.
Wow, wow, wow. That was such a good presentation from our regulator. I want to extend our sincere gratitude to the Mr. CEO, Alhaj, for that. I like the aspect of the analysis, how you actually showed our importance, the value for money. And I want to add on to say, you will not only save, but have protection. You will secure your goods, and not just secure your goods, secure your peace of mind. And indeed, like the closing remarks were, we are all winners in this as far as marine cargo insurance is concerned. So thank you so much for joining us, those who have just joined the webinar. My name is Juliet Igonu. I work with the Uganda Insurers Association and excited to be part of the marine cargo localization campaign. And with us, different panelists, experienced ladies and gentlemen in the insurance industry. But before I do that, I would like to remind us to join us through our social media platforms, that is Twitter, Facebook, LinkedIn, and Instagram, those that are very convenient for you. So we now set to go to our next session, and that is getting into discussing the concept of marine cargo insurance as far as policy document is concerned. We have had concerns from the public saying that we give them policy documents, but the prints that are in there are not easily understood. So to do this, to help us understand this policy document, are a lady and gentleman whom are going to help us understand the scope of cover, what is covered, to what extent, and we've had importers asking us, where does cover start and where does it stop? I will not attempt to try and answer these questions because I have people who are more experienced than me. And to moderate us through this session is Ms. Nancy Ashaba, who is experienced over 8 years in handling underwriting policies of marine cargo insurance. She heads a department, a full team that is in charge of these policies. So I will allow her to say more about herself, but one thing I can assure you is that she has been tested and proven and has contributed to the insurance industry in this space, and I'm certain that all your concerns will be addressed. So kindly throw in your questions in the chat. We will be able to answer them. I now invite Ms. Nancy to come and take us through the discussion on marine cargo insurance policy. I hand over to you, Ms. Nancy. Thank you.
Thank you very much, Ms. Juliet. Hi, everyone. Good morning to you all. Thank you for joining us today in this webinar. Nancy Ashaba is my name, like Julie introduced me earlier. I've been in the insurance industry for over 9 years, and I'm happy to be here. And with me is a gentleman who is also very experienced, Mr. Richard Sevme. I'll invite him to introduce himself and say hi to everyone.
Hi, everyone. Thank you, Nancy. My name is Richard Sevme. I've been in this industry for the past 8 years. We thank everyone for logging in and joining this discussion, and I'm happy to join Nancy in discussing the marine scope of cover. Thank you.
All right, thank you, Richard. Like our regulator, the CEO of UIA rightly put it, as importers, we need to make sure that we purchase insurance for our goods. When our goods are in transit, they're exposed. And it's very important and paramount that we insure these goods while they're in transit. So I'm happy to be part of the team that is driving the campaign, Secure Protection for Your Goods, by purchasing marine cargo insurance. And like every Ugandan, I know most of us don't like reading, but today we're here to make it simpler for you all. I will try to explain what is covered, what is not covered. Richard will be presenting on what is covered, on the scope of cover, on the modes of transport and all. So we'll rightly dive into it. Richard, I know our regulator tried to define what marine insurance is all about, and he was talking about indemnity, and I want us to address or speak to that Chikubo man who wants to buy marine cargo insurance. Yes. So to an ordinary person, how would you explain to them what marine insurance is all about?
Thank you, Nancy. To a layman, as we try to simplify it, Marine cargo insurance is basically protection for your goods from the point of origin to the point of final destination. So basically what we cater for, we provide protection for any loss or damage to the goods that will happen. So like the regulator said it and how NAS has opened it, so it's now mandatory and it's very important, and especially for our importers, to appreciate the scope of cover, what is covered, and we know that most of us are not very keen in reading. So that's why we now come up to try and explain and bring out light to the scope of cover.
I like that part where you're saying protection of goods. I know most of us as Ugandans, we usually ask ourselves, or we usually say, mfunila muwa, tufunila muwa. So to an importer out there who we are trying to tell to purchase this marine cargo insurance, how do they benefit? I understand when you buy insurance, you have peace of mind, you have financial security, but to that marine cargo person you're trying to speak to, how will they benefit if they purchase this marine cargo insurance?
Thank you, Nancy. But just like any other human activity, maritime activities are exposed to a wide range of risks. So just imagine now, for example, a ship moving goods from China to Uganda, like our regulator was mentioning, clothes or metal or steel whatsoever. So it will be exposed and subject to so many risks. These can range from the fires, storm, explosions, and of course those are natural, but then we are not also forgetting man-made activities. These can include the pirates, pilferage. Then we also have others whereby we have other human errors such as collision to the ship, which incidentally also damages our goods. So now when we come in now, we try to make sure that the police we come in, that our trader will be benefiting, and also dealing with us locally here, the people they know they can speak the same language and they will say Funila and I understand.
All right, thank you, Richard. To those who have just joined us, we are having a discussion around marine cargo insurance, the importance of having your cargo insured. Keep your questions coming in. I've seen quite a number that have been posted in the chat. We will make sure all of them are addressed. Feel free to use the language that you're comfortable with while asking your questions. So now, I've picked two key things in your presentation, Richard: piracy and pilferage. Now, remember, our sensitization is all about that importer down there in Chikubo. How would you explain to them the term piracy, pilferage? What is it all about? And is that all that we cover under marine insurance?
No, that's not all that we cover, but just to simplify it further, when we say piracy, we basically mean that act of attacking and robbing a ship while at sea. But then when we speak about pilferage, we speak about this, I would call it petty theft, whereby someone picks part of the cargo, but not the wholesome cargo, so they take that bit. But also just to add on that, marine insurance does not only stop at piracy and pilferage, but then it will extend to deal with all perils that will happen while goods are in transit. It could be a fire or explosion leading to loss or damage to the cargo. We can have entry of water or sea into the goods while at sea. So we can also have overturning or derailment of the transporting vessel while on road. So all those can lead loss or damage to the goods while at sea. Then while we are also not forgetting that we are also liable for misdelivery and non-delivery of goods. Our importer can say that my goods are going to Sevume's residence, you find them in Nancy's residence. So in such a situation, we try to come in, and of course we make sure that our importers don't lose and they continue to have business continuity, and also of course protect our economy.
Okay, well said. So you talked about derailment. Yeah. I know for most of us importers, or even people who have joined in, who are the viewers out there, the listeners, when you talk about marine, most of us will connect the word marine to sea, to water. So I've heard you say derailment, land. Are you trying to say that when you talk about marine cargo insurance, there are different modes of transport that we can actually consider? Can you throw more light on the modes of transport?
Okay, so maybe to approach it in the other way, like we mentioned that the scope of cover we look at under marine insurance operates from when the goods are leaving the original, from their origin to the final port of destination. So now within this course of transit, from wherever they are coming from, let me say we are getting clothes from a shop in China to the final destination in Kampala here. Those clothes will of course first move on road to the sea, Then from the sea, they can go on road again or rail. It can even further use inland waters like our Lake Victoria's until it reaches the final destination to our importer. So in this case, what I'm simply communicating is that our scope of cover is not only limited to the sea, but we are also responsible for all risks of loss that the importer or the person bringing in goods will suffer from the place of origin to the final port of destination. Yeah.
Oh, thank you, Richard. So, from what you just told us, there are perils that are covered. Fire and explosion, derailment. I believe there are also things that are excluded in the policy. Now, as an importer, speaking from an importer's view, I mean, when I buy this marine cargo insurance, is everything covered? If I get a loss, because I've been seeing campaigns out there saying secure protection by acquiring all risk marine cargo insurance. Now, when you say all risks, do you mean that everything that happens to my cargo as an importer or anything that would happen to someone importing their goods will be covered?
Thank you. Now, we will notice that, and like you've said, actually that's where we also encourage our viewers and importers and all cargo transporters to really appreciate their policies. Now, in the marine policy, most of the time we will give a certificate of insurance, and of course our customers don't get to the point sometimes of reading the documents. But in the kind of policy we give, we have exclusions, and exclusion basically we mean those that we don't respond to under the scope of cover. So the role of saying why we put in exclusions basically is our intention as insurers is protect the people for risks which are beyond their control. So we don't want to come into paying for claims which are fraudulent. We don't want to come in to pay claims which a person can clearly control and they just sit there and say, I have insurance, I don't want to care. So for cases whereby, for example, just imagine goods are in transit, they are moving, and probably the driver leaves the car there and disappears because he knows they have insurance. In such a case, of course, we will not come in. So then we also have other losses or damages that are self-inflicted, whereby someone chooses to burn their goods or ignore their goods and all that. So such we will not cover that. Then we also have what we call the inherent vice. And in simple terms, basically, we just speak about the quality of the property that we are transporting that can cause itself to either get damaged or destroyed. For example, if I speak about fish, if you ignore it and you don't put it in certain temperatures, it will definitely go stale. So if you're going to move tiles and you don't probably put them in a particular way and you just throw them on the ship or on the vessel, they can break down. So now when you speak about also the improper packaging, sometimes we request that our customers also can also pay attention to do what? To ensure that their goods are properly packaged. There's normally a packaging list that is issued. Always look out to that list and see how your goods are packaged to just ensure that they are properly packaged. So by doing all this, we are trying to say that yes, we can take care of all accidents that you cannot control, but then we are not saying that ignore the risk and let it be because you've paid a premium. Yeah.
All right. Thank you very much, Richard. There are some interesting questions in the chat that are coming in. Please keep them coming in. Those who have just joined us, we are discussing marine cargo insurance. We need to all secure our cargo and purchase marine cargo insurance. Yeah. Now, just before we take some of the questions that have come in, you talked about the exclusions that are not covered in the policies. Yes. Now, you talked about packaging, you talked about inherent vices. I want you to throw more light on those things importers should look out for. The small print that usually is not obvious in the policy documents. Yeah. Please throw more light.
So most importantly, we normally want to make sure that our importers also look at their documents, because you might find that you've ordered, for example, I gave an example of tiles, but some importers will get like a commercial invoice indicating something else. Then they submit that to insurers, and probably maybe an underwriter somehow misses it. So tomorrow you bring a claim, yet the commercial invoice had an error somewhere, somehow. Now we also have what we call the bill of lading. This is normally issued by the vessel operators. If you're using, for example, the sea, they will give you a bill of lading, but if you're using air, then you will be given a what? An airway bill, what we call an airway bill. So basically this is issued at the point when the vessel operators receive the goods on board the vessel. So you always need to look out that the goods they are showing, the weights and everything, are reflecting what you're expecting. Because when you come to us as insurers, we may not, for example, look into claims such as loss of weight and all those related things. Then we just need to also monitor. Sometimes on, for example, where they involves multiple ports moving, maybe the goods have to be exchanged at a certain port. So whenever goods probably are damaged from during the course of transit, we normally encourage customers, if you can, you also track your goods. You try to monitor. For example, if it reaches like Mombasa and it probably there are some differences, there's what we call an outturn report. So this one, of course, will highlight differences in what was initially released and versus what is received. So at that point, you notify your insurers, and we just make sure that what we monitor your goods and actually compensate you early enough. Then we also need to make sure that even as the goods are moving, we monitor the policy period that our insurers have given us. So if you've been given a cover that is maybe for 20 days or 30 days, so don't just wait for so long and wait to bring up your claim later on in the long run after your cover has expired.
Okay, thank you, Richard. Some of the interesting questions that we've so far received are in line with the types of cover that this policy or this package comes with. Someone in the chat is asking where vehicles are coming from, say Kenya, and are driven on the road, and what kind of risk is that? What is covered? Is it marine? Is it goods in transit? So I want you to take through the viewers, our dear listeners, our importers, on those different types of marine insurance and how they operate.
Thank you, Nancy. Now, like I explained that goods might involve different means of transport from when they leave the original port of origin or even the original shop whatsoever to the final port of destination. Now, when we speak about inland transit, basically we will speak about, for example, the transportation of goods within, for example, the inland waters. Like, for example, moving goods from, let me say, Kenya to Uganda using Lake Victoria. That's an inland transit. Some insurers call it goods in transit. Then, or even within the East African region or within our borders, we call that inland transit. Now, for situations that involve overseas and movement from one probably borders to the other and using the seas, that's when the marine scope of cover comes into play.
All right, thank you. So some of the questions are preempting maybe a discussion, because I'm seeing questions to do with premium computations and all that. Yeah. But maybe before we take some of these questions, I want to understand, someone has asked, do you cover goods from Tanzania?
Yes, like I've just explained, goods from Tanzania would be covered within our inland transit cover. But the most important aspect, we need to take note that the goods that we are going to cover are going to be goods coming to Uganda. So there has to be like someone, so we are not going to tell people in Tanzania to lose goods and come and insure them here. So the goods have to have a relationship with Uganda, coming to Uganda and having a person in Uganda have to have an ownership of the goods somewhere, somehow. So we're not saying that probably we are telling people in Tanzania to probably come to Uganda, get the insurance at a low price, and then they come and bring up claims without a local interest.
Okay, there's an interesting question, and I'll just bring it up at this point because probably it's important that we tackle it right now. One of our viewers is asking, in the event that there are delays in transit due to unavoidable circumstances, does the marine cover take care in the event of a claim?
Yes, it would, but of course it depends on the circumstances. Okay, like any other business, insurance is also a business. So when we speak about unavoidable circumstances, to the marine policy, some of the circumstances I can speak about are war. Our insurance policy covers war, terrorism, and other things. So those, when you look at such, those are not within the control of the client. And we say that we seek to remove certain exposures which are beyond the control of the insured.
So, Richard, if my goods are held up at the port of discharge, for example, and my policy that I've purchased is expiring, say today, is it in order for me to engage the insurer, probably to extend my policy for another, say, 1 month or 2, or cover is automatically terminated?
So it depends on the border where you are. Let's say, for example, someone bought goods from China to Mombasa, and for some reasons they're held up in Mombasa. So the scope of cover we give will allow you some additional 30 days to enable you, actually 60 days to enable you deal with that delay. Now, in case that delay is going to go beyond those number of days, then you need to notify your insurers. Because once your policy expires, then it will be assumed that the insurer has no more liability and the goods are delivered. So, however, if it has reached like our port here in Uganda on the border, still I think within those days, unless the delay is something beyond, for example, we are bringing in illicit goods such as marijuana and URA has to hold it or whoever, we can't cover that even in the first place. So because we are professional entities and we do not support breaking of the law, so we will not take certain kind of goods and such delay will not be taken care of.
Okay, so one of the viewers has posted a question, and they're saying, what's the difference in the premium charged for an open-ended policy to a term policy that is usually for 3 months cover? Now, I know you've tried to explain to us on the different types of cover, the single transit, the annual cover. Please throw more light so that our viewers understand the difference between an open policy and the single transit policy.
So thank you. Now, what we call an open cover policy, this is a package we give to our traders who have constant trading throughout a given period of year and have some kind of huge volumes. Now, for these traders, what we simply do, we give them an open policy. Let me say that someone is moving 1 billion of goods in a given period, say 12 months. So what we simply do is that during the 12-month period, this trader will be declaring to us the amount of transits they make. So provided that the kind of goods they move are within the terms and conditions of the policy, they simply need to declare to us that they've moved until their limits are exhausted. Now that's what we would call an open cover policy. Then when we come to the single transit covers, we basically look at these traders who will look at one-off items. For example, someone has received a gift, it's just coming, or someone is doing a one-off trade, is not a constant trader, and is moving or is importing something on a single basis. So it means that once that item comes in, it will be covered like for a period of 3 months, and that trader is not looking forward to having the insurance in force or calling another similar item. So those are the ones we do under single transit. I can also give you an example, Nancy. For example, today, if you say you're importing a Benz from Japan, it is a one-off. You're not going to continuously buy Benzes. It's not your primary business, but because you decided not to buy, you want to import or something, then we'll give you a single transit, and within 3 months, we will expect you to have probably the goods to be delivered. And in case you're using a plane, either way, we are not going to expect a plane to be moving that longer, so we can give even a shorter period. That is what we call a single transit.
Okay. Thank you very much. Thank you very much, Richard. Another interesting question in the chat is someone has asked, when does the insurance start? You're talking about policies moving from Mombasa, from China, by air, by sea. So some interesting question here. Someone is asking, when does the insurance policy start? Yes.
Okay. So now our insurance policy starts immediately from when the goods are first moved from their, let me say, for example, we have a supplier in China and we are moving clothes and they are in the supplier's storage or warehouse or whatsoever. So cover will immediately start at that point when they are being moved for the purposes of being loaded into the vessel that is supposed to, which is part of the transit modes. Assuming we are saying that these clothes will be moved by road from the shop in China to the port, to the port where they will be loaded to the ship and then come to Mombasa. So our insurance coverage will start from that point when they are moved for the purposes of being loaded onto the first car to take them to the border to continue with the normal movement. Yeah.
All right. Thank you, Richard. So from what you've told our viewers and to our dear viewers, one thing that we must know is insurance is arranged based on the mode of transport that you're going to use while moving your cargo. So make sure you reach out to the different insurers when you have your cargo in transit. Whether it's by air, whether it's by sea, whether it's by road, don't hesitate to take on insurance because we need to secure our goods. Now, that said, I just wanted to understand, we've been talking about marine cargo insurance, but if as an importer, where do we go when we need this insurance? What are the requirements for one to actually purchase this type of insurance?
Yeah. Thank you, Nancy. We've tried to make this very simple for our customers, and I think we try to play a clip here whereby you can go to our UIA portal, fill in the information that is required, and it's mainly the commercial invoice and the packaging list. We will get a quote, of course, depending on the kind of goods you're going to transport. And once you get that quote, you simply have now to pay, and automatically URA will even automatically recognize that you have that insurance. So, but alternatively, you can go to any insurance provider to get this insurance that is locally licensed by the Insurance Regulatory Authority. Yeah.
I like the fact that you brought in a component of pay. You see, when the regulator was presenting to us, to our dear viewers, he gave us two good examples, one for clothing, where it was for single transit, and another option was for an annual transit. Yeah. Now, one of the viewers pasted in the chat and asked a very important question, and they asked, I'm just going to read the question. They're asking, does the different material categories have, I think it should have been anyway, sorry about that. Do they have different insurance premiums? Or why is it that Chairman's example, clothes have a higher insurance premium rate compared to the metals? So how do you come up with these pricings for the different categories?
So maybe to just tell you, to just bring you, I'm trying to simplify this further. Now, we first of all have to confirm, maybe, to answer the question right, we actually charge different premium rates. So insurance is basically about spreading risks, and that's why we charge a small premium. So if you look at Chairman's example, the CEO's example for IRA, we saw that goods which are 100 million, we are charging like 120 or something. So basically we pick small premiums, meaning that we pool risks together. So definitely the risks that we are bringing to the pool have to contribute a reasonable contribution depending on the exposure that they bring to the common pool. So the reason why we charge different rates is that the exposures that clothes can probably get fire easily might not be the same exposure for metals. So that's why you might see a higher rate for clothes but a lower rate for metals. So we basically charge a different rate, and also basically because there's a different exposure each item brings to the pool.
Okay. So to our dear viewers, listeners who have just joined in, we are discussing about marine cargo insurance, and those of us who joined late, we had a session with a regulator and CEO of UIA who emphasized that marine insurance for all importers has been localized. And now there's a question in the chat, and maybe the person joined in late. Someone is asking, what happens to importers with Incoterm CIF, where the responsibility of insurance and risk resides with the supplier who may take out insurance in his country or in his country for his comfort? Now, to our dear listener who posed this question in the chat, I want to re-echo what the regulator and the CEO of UIA said in their opening remarks. Currently, marine insurance for importers has been localized. So basically you purchase the goods based on CF, and then you have to take on insurance in Uganda. So C&F will be the new Incoterm for our importers. Otherwise, you'll be penalized, like the regulator rightly put it. Now, there is another question that has come in the chat. Please keep the questions coming in. Richard, you can throw more light.
Okay, also to our viewers, I think it's also important to understand these Incoterms because they are the terms of trade which determine the relationship between the buyer and seller. Now, when you look at CIF, most people have looked at the component that it requires the seller, of course, to arrange insurance. But in those terms, you realize that the requirements of the seller is based on the minimum insurance possible. The insurance we are bringing on board to you, which some traders are comparing with the insurance they've been getting in CIF, we are bringing with what we call a broader insurance on all risk basis. So the CIF is based on limited scope of cover, and it will not even cover the accidental damage and so many things. So we try as much as possible to ensure that our Ugandans are protected with the premiums they are paying. So even as our importers are comparing our premiums, they also need to appreciate that we are coming up with a value, a win-win, like our regulators said, and we are coming up with a better proposition that ensures that our local people benefit in this insurance program. Yeah, thank you.
All right, thank you, Richard. There are very many interesting questions. I believe we may not be able to exhaust them at this point. I'll task the Uganda Insurers Association to respond to most of them and maybe paste the responses to the website so that our dear viewers can get their queries responded to. Most of the questions are in line with the economy. I'm seeing questions in line with the new portal. I'm seeing questions in line with the export component. So there are quite a number of questions that we may not, go through at this point, but I'm sure we'll respond to each and every question and paste on the different social media handles so that you get the responses. Now, Richard, we are coming to the end of our session, the writing session. I don't know if there's any other thing that you may want to tell the dear viewers. But before you give us your parting shots, I want you to respond to this question that has just come in. Is the bill of lading given to all clients at the time of loading the consignment on the ship?
Yes, because I mean, like the way when you pay premium, you're given a receipt. So a bill of lading or the airway bill for those of our customers who would be using the plane, it is the evidence. It's even when you're holding that particular vessel operator accountable that they received your goods. It's the evidence that they have the goods. Even for us in our insurance, it's a very important document because it's evidence that the goods have actually reached the moving vessel. So we always encourage you to request for them because it's your document.
Okay. Thank you, Richard. There are quite many questions or queries on the issue of high premium rates. Someone is saying in the chat that our importers have been enjoying lower rates from the covers they purchase abroad. But I'll leave this question to our dear regulator and the team for UIA who will respond accordingly. I've seen queries to do with the current portal. I'll also leave that to the team at UIA to be able to respond to the different queries. Now, I just have another last question for you, Richard. So, there's a question coming in from one of our viewers. They're saying, are there some good types of goods that insurers do not cover? And what could be the reason for not covering such goods?
So, first of all, yes, there are goods that we will not cover. So, first of all, one of them we said that, like I mentioned earlier in my submission, we will not cover illicit goods. So we cannot be the promoters, for example, of a person bringing in drugs that, first of all, that will harm the public. So we will not be now the ones to say that we need to ensure that a person bringing in like marijuana or whatsoever, we ensure that it reaches safely. We will just be contributing to the destruction of our economy. So most of the goods that are in such a state will not cover those goods. So what we normally encourage our customers is, actually, and most of the goods that we cover, we've even aligned them to our portal. So as you're picking, definitely you will see this. But for the kind of goods that are well packaged and they follow within the terms, we normally advise you as and when we are quoting to ensure that we are happy with the goods we are doing, but we will really ensure that we cover most of the goods that you propose to us as insurers.
Okay, thank you, Richard. Marine cargo insurance is broad and we may spend the entire day or a month discussing the same. So at this point, I'll request our viewers to continue pasting all the queries they have in the chat we'll be able to respond immediately after the session, because we've been given a few minutes, to throw or expound on what marine cargo insurance is all about. Would need a day or a month to actually take that team through. But we are available, we are reachable on the website, UIA website. Paste all the queries and they will be responded to. So at this point, Richard, I invite you maybe to give your parting shots to our dear viewers and listeners.
Thank you, Nancy, and thank you everyone that has been listening in, and our viewers probably. So for me, as we are leaving this, I would just want to encourage Ugandans to continue believing in Ugandans. We've now started this journey of mandatory marine cargo insurance. So let's support each other. We call upon your support. At the end of that day, the premiums come back to our economy. We create employment opportunities and make our Uganda better. So let's continue to support each other, believe in each other as we are protecting our goods. So we simply buy Uganda and build Uganda. Thank you so much.
All right. Thank you so much, Richard. And from today's session, I believe everyone who joined in, to all our viewers, to all the listeners and all the importers, I believe we've learned that purchasing marine cargo insurance is very critical. I know most people believe that insurance is not a necessity, but believe me, it is a necessity, because you need to have financial security and ensure that your goods are secured by purchasing marine cargo insurance. Thank you, Uganda Insurance Association, for having us here. It's been an opportunity and a pleasure representing the industry to sensitize our dear importers. And I thank you, Richard, for sparing time and sharing your knowledge with our dear importers and viewers. I will now hand over to our dear MC for today, Julie. Thank you. Over to you.
Effective 1st July, all inbound cargo is required to have local marine cargo insurance. Don't get caught off guard. Get your local marine cargo insurance quickly and with ease via www.uia.co.ug. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your marine cargo insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And just like that, you have your policy sent to you via email. Secure the goods with the local marine cargo insurance. Nweze mali. This message is brought to you by the Uganda Insurers Association. Buy Uganda, build Uganda. 1st July, all inbound cargo is required to have local marine cargo insurance. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your marine cargo insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And you have your policy sent to you via email. Nweze mali. This message is brought to you by the Uganda Insurers Association. Buy Uganda, build Uganda.
Doing justice to Uganda Marine Cargo Insurance Policy document as far as scope of cover is concerned, extensions, the exclusions, the conditions. You did a wonderful job. In fact, if I had the audience in physical, I would have clapped for you, but I represent them by clapping for you. You have done it. You have done it. So I now want to encourage us to continue sending through your questions. The beauty is we may not be able to respond to all the questions, but we'll continue engaging through our social media platform. And in fact, we have already started responding to some of them through our PR team. Just be assured that we'll respond to all of them. We are not leaving any question unanswered. And without wasting any further time, I would like to introduce the next discussants to you, who are going to take us through the claims process. And one thing I must say is insurance operates in the principle of large numbers. When we have many of you, we will be able to address the concerns that so far have come through the questions of the premium charges being high. So just don't worry. As Richard said in his part in short, support. If you come through, trust us, we will give you the protection and also pay your claims. Also, the insurance in general, takes care of the uncertainties, things that are beyond your control. We want you to sit and import your cargo with a peace of mind, knowing that even when the uncertainty happens to your import while in transit, insurance is there to protect you, and we shall secure your good and ensure that there is continuity in your business in case of any financial loss. We will be able to compensate you. So after you have bought the policy document, and now time for the value of money comes in place, what happens? To take us through the discussion on the claims process, when an accident happens, when a loss happens, when a damage happens to your good, is Isabella, who is a seasoned claims specialist. She has done it for years. At least I can assure you on that, because I used to work with her in that space. So I want to assure you that we are going to take you through the claims process. So what happens? How do I go about it? Where do I start from? Isabella has worked for over 10 years. I can affirm that. And she has handled different claims in marine cargo insurance that have come through. Usually we have a saying in insurance that the best people who understand policies are the claims handlers. Because when a claim happens, you open that policy document cover by cover to ensure that the client gets the compensation that they deserve. And we have seen most claims handlers come through to encourage or recommend an adjustment in the policy in favor of a client. So I'll not talk much about who Isabella is, because you will hear it by yourself. Isabella is also joined by Ivan, who is equally a seasoned claims specialist. So I encourage us to also send through the questions related to claims. Kindly note that we settle claims, and we are going to settle the marine cargo claims. Thank you very much. Again, just a reminder, those who may just have joined us, you can follow this webinar through our social media handles, that is Facebook, Twitter, and LinkedIn. Also through our YouTube account on the website. So Isabella, how are you?
I'm well, Julie.
Are you ready to take us through?
Very ready.
Please take it on from there.
Thank you, Julie, for those kind words. Ivan, you could say hello to our audience.
Yes, my name is Ivan Matovu. I have been working in the insurance industry, specifically dealing with claims for the past over 10 years. And I'm really, really privileged and happy to be part of this discussion. Thank you.
Thank you, Ivan. So let's just dive into this because the audience is very much interested in getting the benefit or understanding where does the value come in when a loss happens. The beauty about this, or the unfortunate bit, is the value of insurance is realized once a loss has happened. So we are here to assure the listeners today, we're here to assure our public today that insurers do pay claims. The last stats show that we paid over 400 billion in claims, and this is just a testament to the fact that your financial loss is actually covered when you incur such a loss. So our audience would like to know our claims process. Probably they have at the back of their mind that the insurers want to frustrate them. Could you just give us a general overview of what the claims process is like?
Okay, thank you, Isabella. I will basically share what the claims process is in the simplest way possible, the simplest form it comes across. So basically, in order for an insurer to deal with a claim after a loss has happened, there has to be a notification. Basically, this is a requirement on the importer's side in this particular case, that you notify the insurer of a claim after a loss has happened. And then immediately thereafter, the insurer will have certain requirements that they will need in order to be able to process the claim.
So notification is very important.
Very, very, very key.
And it is something we need to emphasize to our listening audience, that for you to have your claim, addressed in the best terms possible, it's always important to give that first initial notice. Any other
thing that our listening public would like to know when it comes to processing their claims?
Yes, like we mentioned, notification starts off the process, but of course not just any notification at any time. The notification has to be timely because the policy requires that you notify your insurers of a loss that has happened in the shortest time possible. And then, of course, like I mentioned, there will be requirements that the insurer that will need from you, which when submitted, then a claim will be processed, and thereafter settlement happens. So in its simplest form, that is basically the claims process.
One thing that our importers or traders are very mindful of the fact that as insurers, we tend to give them a very long list of supporting documents to progress their claim, right? Are all those documents necessary? Do we really need all that information?
Yes.
Because the assumption is that I have incurred a damage or loss, and
yes,
I should be expecting a notification from my bank that I have received money.
On the account. Yes. Yes. What I'd like to say is, I'll give an example, an analogy from banking. The money you deposited on the account is basically yours. But we all know that when you walk into the bank and you actually need to withdraw your money, you will not just simply go to the teller and say, I need my money. I put 20 million shillings on the account, and therefore I need to have it. There are procedures, there is particular documentation that you'll be required to, to fill in or to submit. An example is basically you fill in a withdrawal slip, which you then present to the counter, and then after a few processes, the verification and all that, ID, then this money will be given to you. So in a similar way in insurance, there are those requirements that have to be submitted. A claim will not just be paid based on you notifying. There are processes and procedures, and those requirements are also there. So such things as the claim form that I mentioned, of course, I believe we're going to be talking about the documents in more detail, but the procedures are there, the requirements are there, and they're very necessary.
Okay.
Yes.
One of the things, one of the procedures before a claim is settled that you mentioned is we have to do some bit of loss adjusting, and this loss adjusting requires the involvement of third parties that are party to this process. Could you just shed some more light, because the viewing public may not really understand who this loss adjuster is that we are appointing. Do they work for the insurance company? Do they intend to cut the claim of the insured that has lodged in? Yeah, just talk more on that.
Okay. Basically, the loss adjuster, surveyor, assessor is key in the entire process. We rely on service providers when we are dealing with claims because we, as the insurers, do not have all the expertise to deal with each and every aspect of a claim. And of course, claims come in different situations where these losses happen in all sorts of places. A loss can occur in Malaba, a loss can occur on Kenya side, your insurer is here, like in this case in Uganda. A loss can occur on the high seas out there in the ocean, and something happens. So it makes it necessary for us to engage these kinds of service providers. We use them as insurers, as our eyes and ears on the ground, to go get to the ground and verify some facts. Yes, you have submitted the documentation, and probably you've done your part at that point in time. All the requirements have been submitted, but then there is a verification and confirmation of facts of a loss that needs to be done. An accident has happened to the truck that is bringing your goods before they reach Malaba, and of course we are not there physically as the insurers, but then we have somebody who can go in there. He needs to get in touch with you, get information from you, look at the documentation, verify the circumstances of loss. Did the accident happen? What really happened? Discuss with the transporter, the driver, and all those kinds of things. Basically, collect all this information, produce a report, that, you know, can enable the insurer easily and, you know, first in an efficient manner be able to settle a claim. And of course, they are appointed by the insurer. But one thing that the public needs to know, that these service providers are regulated by our, you know, insurance regulatory authority. They are professionals, you know, and they know exactly what they are doing. They have the expertise to be able to deal with these kinds of issues when they arise.
And important to note that the external loss adjusters or surveyors are independent of the insurance company.
That's very
And
true.
these are people who are very, very, who have the expertise in dealing with the kind of the losses that happen. Some are engineers,
Yes, true.
yeah.
True.
Some are, how do you call them? Plumbers. Some are, they're very different types of professionals that are involved in this. And we have a question that is coming in from somebody called Lukenge. How long does my claim take to settle? How long does it take to settle my claim after notification?
Okay, that's a very good question, and it's of course a common one. The key for claims is one of the key things that we deal with when we are dealing with claims are the timelines. Everyone wants to know, I have lodged my claim, I have fulfilled my requirements, submitted everything. How long after that do I get paid? And of course, like I mentioned earlier, claims come in different shapes and magnitudes. You know, each and every claim is looked at, you know, on a case-to-case basis. There are those unique attributes to each and every loss that happens, but at the same time, there are those smaller, less complicated cases. I'll give an example. You'll find that somebody is importing tiles. Tiles are for building, and there are those people who are dealing, like I believe some of our traders who are dealing with Ndibota, these bales of used clothes. It's a common business that we do here in Uganda. And you find that maybe the goods have come in and a few bales are damaged. The water, you know, went
Sipped
through the container, and some of the bales are damaged. And for such losses, it may not be necessary to appoint an assessor to go in and do an assessment. It's a simple claim, probably of about 2 million shillings. That claim should not take more than 2 weeks to be, you know, to be settled.
So we're saying for simple claims, the average time that we take is about 2 weeks.
It should not take more than 2 weeks. Then, of course, there are those more complex claims, like I mentioned. Each claim has its own attributes. There are those claims that have occurred far away from here. The goods were headed to Uganda, but a ship got a problem off the coast of East Africa. And there are all these, all these politics that plays into that. And of course, even the people that we appoint to go in and deal with these losses on our behalf have to navigate all that. So definitely that kind of claim might not take the 2 weeks. It could take probably a month or, you know, or more, depending on how complex it is and, you know, how far away the loss has happened and all these things. All these come into play. But one thing that I need to make clear is that as an industry, as claims handling people, our commitment is to ensure that claims are paid in a timely manner as soon as we have everything that is required for settling of a claim.
Wow, thank you, Ivan, for that. In your experience, can you give us circumstances where a claim would really not be considered by an insurer? Because I believe there are certain instances like that.
Yes. Thank you very much, Isabella. Definitely. Contracts of insurance have what technically we call exclusions, but I wouldn't want to. I want to make it as simple as possible. Our colleagues before us did mention that the policy will pay for certain things, but it will not pay for particular things. And in simple, common, you know, circumstances or those things that the policy will not cover. We talked about the excess, you know. The excess was alluded to by our colleagues. That portion or that part of a claim that you as the insurer or you as the insured or the owner of the goods, the client, that you have to take care of. So that part definitely will not be taken care of by the insurer. It is yours to take care of.
Are you saying that there's responsibility still on the side of the claimant to make sure the goods are, say, secured? So
Yes.
they have to make sure that when a loss happens, it is not, the damage doesn't continue, so that portion is actually secured.
Yes. Well, related to that, yes, but specifically, we are talking about any claim. I'll give an example.
And who determines this excess?
This excess, of course, is put in the policy, and it is something that is agreed upon at the time when the policy is issued. There are those, of course, that have the standard excesses, but then when they're at the point of issuing the policy and the pricing and all that, the insurer and the client can actually agree on this excess amount. So I'll give an example just to drive the point home. You have a 2 million shillings claim, and your policy states that there is a 500,000 Uganda shillings excess. So how that plays out in the when the claim happens and you have a 2 million shillings loss, when the insurer is computing what is payable to you from them, it would basically be 2 million shillings less the 500,000, and what you're basically going to be getting from the insurer is 1.5 or 1,500,000 shillings. So that 500,000 is a loss, is that part of the loss. Each and every claim, irrespective of whether it is 2 million shillings or 10 million shillings, your part to pay as the client is 500,000. So that, in a way, is that portion that the insurer will not take care of.
Okay.
Yes.
Okay. Are there any other circumstances? Because I'm sure in our industry and in our experience, we've had instances where there's a bit of fraud or dishonesty
Yes.
when somebody submits a claim.
Yes.
Could you just speak some more detail into that?
Yes. So world over, I don't have the statistics of head. Fraud is a very, very serious issue world over, and of course even in Uganda here. So when a fraud happens, and of course it manifests, so it comes about in different ways. It could be a falsification of documents, or it could be come through exaggeration of figures and things like that. So because we want to promote honesty and integrity, insurance as well, of course, has these values, you know, as a bedrock. So we do not want to promote, you know, these kind of dishonest acts of dishonesty. So issues to do with fraud, claims that come through and are noted to be fraudulent, definitely those ones will not be paid.
Wow, wow. Yes. We have more questions coming in. Please keep the questions coming in. We have a question from Joyce Achen, who says, please explain details of notification requirements. In what form is it expected? Does it have to be a walk-in, or I can WhatsApp you, or I can send you a notification via your LinkedIn? Is that acceptable, or through your Facebook page? Yes,
that is a very interesting question, and it's a common one as well, because people want to know, and I believe our importers, our traders are listening in or watching us would want to know, how do I get my message across? You know, of course, there are different channels through which people get insurance. Somebody may have approached a broker. Somebody may have walked into an insurance company. Somebody, of course, now with the new arrangement, there is the portal. And of course, the world is changing and it keeps changing. There are all these ways of communication, the ones like that you've mentioned, LinkedIn, WhatsApp, and all that. So ideally, as long as there are those provisions that have been made, you can make a call to your insurer and make a notification. You can walk in. You can use all those channels.
Are the insurers available 24/7?
Well, with the offices physically may not be open 24/7, but the good thing is that we have all these other options. You know, at any one point in time when you become aware of a loss, you can use all these other options: the Twitters, the WhatsApps, and all that, and all these social media. A call as well, like I mentioned, an email. I can send an email from anywhere at any time. If somebody has access to his emails, he can send an email at midnight, and that notification is valid because, you know, it has actually been received by the insured. The response might come in the morning or at dawn, but then at least somebody has been able to notify the insurer. So at any of these, as long as they have been made available by your insurer, you're free to notify.
Okay. To our audience that is just joining in, we are talking claims, we are talking claim procedures, how to put in a claim so your insurer can settle you for damage that has occurred. We have a question coming in. You spoke about notification and the timing. What happens, the question is, what happens if I discover the damage several days and no notice has been given to the concerned parties?
Okay, that is another interesting one, and of course it speaks into one of those circumstances when probably a claim may or may not be admissible, but we do not want to appear to be a group of people who claim to be partnering with traders or any other clients who are not flexible or accommodative. You see, there could be reasons why somebody is not able to notify you in time. Those reasons probably are beyond their control. To their best of their knowledge, they came to know about this loss probably at a certain point in time. The loss may have happened probably much earlier than that. But as long as it is very clear and there are plausible reasons, clear reasons that are valid why somebody has notified you at a certain point in time and not probably earlier. I'll give an example. Some of our drivers, a transporter may have custody of your goods. They've been entrusted to him. He's entrusted them to a driver to bring them from Mombasa to Kampala, and something happens along the way. Now, when something happens along the way, it may not be apparent at that point in time that maybe this is something that needs to be reported. Maybe it was not a serious accident. The container does not look like it has an issue.
So that damage is not visible? It
is not visible at that point in time, and therefore they don't see any reason why they should notify probably the owner of the goods. But then when they come to Kampala and the offloading starts, then it is noted that something is wrong inside. And of course, as long as it can be traced back to an incident that probably happened, that was not reported, I think with reasons, with case to case, some of these things can be accommodated. It's a little bit different from another case where somebody actually knows and they have actually gotten to know that something is wrong, an accident has happened, and they go about their business. Then they only remember to report when they probably have arrived, the goods have arrived in Kampala, and after that, time has gone by. That is a totally different, case. But as much as possible, as insurers, we want to be flexible and accommodative so that we don't leave our clients out to dry.
So in other words, what we're trying to say is we will look at every claim and try and understand if there were any reasons for the delay. If we are satisfied that the reasons are actually genuine,
yes, we
can consider such a loss.
Yes, we can.
That is great. If you could just speak on the aspect of the damage that remains after a client has been, compensated. Yes. Do they have to walk away with their damaged Ndibota, their bill? What happens to it?
Interesting. Yes. There is an aspect of insurance that usually arises at the claim stage, or technically we call it salvage. In simple terms, trying to break it down, is basically what remains after a loss has happened. If I'll give, I use an example of what is common that a common example is an example of a vehicle that has crashed. That vehicle is insured, it has crashed, and
it can no longer be repaired.
It can't be repaired, and we have a wreckage. So the question is, what happens to that wreckage? Who owns it? Do I, the owner of the vehicle, keep it and also get the money from insurance? And I'll take some time to break it down for us and for our audience. Basically, insurance, like the speakers that came before us, is basically a contract of indemnity, and indemnity is a key pillar or a fundamental aspect of insurance. Basically, what it puts out is that you cannot profit from insurance. you can get a benefit. Insurance gives a benefit as a service.
Could you clarify on that?
Yes.
I don't have to profit, but I can still get a benefit.
The benefit is basically the cover that you get from it. When you have a loss, you're covered by way of receiving proceeds of a claim once the insurer has actually processed the claim, and then you're able to be indemnified or compensated for a loss. But then when we talk about profit, you have probably gotten more than what you're supposed to get. Ideally, insurance is supposed to take you back to that place, that position you enjoyed immediately before the loss, as much as possible. Okay, so imagine you have these goods have come in, the Ndibota and everything, and the entire consignment, the entire container of these goods is damaged completely. You know, they cannot be used, they cannot be sold, because most of our importers are basically importing these goods to actually sell them out. So they are not in a state that can be sold, so they can technically be called, completely damaged, 100%. So when the insurer does pay you for that total loss, ideally whatever is left, the damaged Ndibotas, or those used clothes, belong to the insurer, and they are supposed to be surrendered to them.
But aren't there possibilities when I probably want to use something with them as the person who has suffered the loss? Am I not allowed at some point to, you know, say that I should be given priority?
Yes, that's a very good question, and I'll take time to address that as well. So when we're taking over these goods, of course, we as insurers do not deal in these goods. Basically, at the end of the day, we also would want to dispose of them and get the money, the value for money that is within whatever is left in those, in these goods. At the end of the day, once we get them, we also dispose of them, and we get money from them. But it is very possible that the insured or the owner or the importer is interested in those goods. We usually want to give them first priority. So once those goods have been valued and somebody has expressed interest, where it comes from or where it starts is if the importer has expressed interest in keeping those goods. Then we will discuss and agree on a value that we can actually adjust from the amount payable. I'll use an example. If these goods, the total loss is the 2 million shillings that I used as an example earlier, and we find that we have valued these remainder, these damaged goods that say maybe 200,000, and you have decided that you're going to keep them. So what will, in keeping with that principle of indemnity that I explained, to take you back to that position of a loss and that you enjoyed before the loss, and to ensure that there is no profit that comes out of this transaction, we will knock off, because ideally you're keeping them for yourself, but then we will knock off that value from that 1.5. So the net that will be payable by the insurer will be the 1.3 after removing the value of the damaged goods.
So it is possible for the insured to retain these damaged items that they could probably use for their own use.
If they express interest.
If they express interest, correct.
Yes.
Take us through an incident where you have adjusted the loss for the customer and the customer is still not satisfied. So there are complaints coming in. What options do they still have? Is it that once the insurer has stated their position, they cannot go back on it?
Well, it happens severally that somebody may not be happy with the way an insurer has adjusted the claim, for example. And by adjustment, I'm talking about the computation, because every claim comes with a computation. Somebody will say, I am not happy with the way you have computed my loss. I'm not happy with what you have deducted from the loss. I probably am not even happy with the excess that you have removed from my claim. And some adjustments will even leave a balance that is way too small compared to what somebody was expecting. So the question is then, what do I do? You have offered to pay me 1 million shillings. I was expecting 1.5, And of course, maybe the explanations have come through and they're not satisfactory. What I would like to assure the insuring public and our traders and the importers is that there is redress. There is something that you can do about it. And this, there are complaints bureaus within the claims departments of insurance companies where you can actually lodge in your claim and your complaint and have it, considered and dealt with. Of course, there is our regulator, our insurance regulatory authority has a complaints desk where anybody that feels that they have not gotten what they expected, they have not been treated fairly as a customer, they can actually go to our regulator and lodge in their complaint, and it shall be considered and dealt with accordingly. We also have our Insurers Association that also welcomes these kinds of complaints, and together all this is meant to ensure that our insuring public build trust in who we are as an industry. We are not people who are just there to, like you mentioned, chop someone's claim and basically
and force them to
exactly.
accept their words that are
yes.
given.
So when you're not satisfied, there is a way that you can actually be assisted.
Wow. And that information can be accessed on the IRA website, the UIA website, the Uganda Insurers Association website. They'll be giving us the details that they are in and how to, where you're not satisfied, how you can be able to lodge in your complaint and it will be addressed. There's a question that keeps coming back here. It still takes us back to the claims process and the documents that we require. Somebody is saying, could you just elaborate more? We spoke only on the claim document, the claim form.
Yes.
Is it the only document that you would require? Of course, we cannot go into the details of all the information because circumstances dictate
yes.
certain documents, but could you just speak on and highlight more for our audience here?
Well, I'll get right to it. Yes, so because specifically now we are talking about marine insurance. Each class of insurance has its unique requirements because they all cover things that are different things, they're different loss types and all that. So specifically for marine cargo, we need the claim form that we mentioned. There is what we call a commercial invoice. I believe that those kinds of documents, that document is familiar. Our viewers and listeners are familiar with what a commercial invoice is. There is a bill of lading, there is a packing list, there are delivery notes, and of course what we talked about.
If I could just jump in there, Ivan, I have noted that sometimes as insurers we retain some of this information,
yes.
and at the time of the claim we go back to the customer
and request for it again.
Why would such a situation happen?
Well, this information, yes, some of it has already been shared, but then of course at the time the loss happens, for purposes of verification and confirmation of details, we would want to have a look at it again. Because we've had, we've learned from a lot of experience. At the point of loss, it's a critical time. And of course, while some people are in need, are genuinely in need, and the loss has genuinely happened and it needs to be paid, unfortunately, we encounter cases of people who want to take advantage.
Sometimes a client will say you're frustrating their efforts to get their claim paid.
Well, it might seem at that point, but then of course once you appreciate, you help to appreciate why these things are being done, then it becomes clear. Because like I mentioned, I gave the analogy of the bank initially. The money is yours, You've put it in the bank and it is yours. There is no doubt about that. But then why does somebody require you to identify yourself when you walk in? The question will be to the teller or whoever it is that I'm the one, But then in some cases, you'll be asked to produce your ID. The ID was produced at the beginning, but somebody will still want to require that ID again.
Exactly.
He basically wants to verify and confirm, okay, the person before me is the person in my records and actually is the one that is eligible to receive what is his. You know?
Actually, so this means that we're trying to sieve out the unscrupulous
Exactly.
people who would want to benefit.
That kind of thing.
Unfairly.
I would not want to pay a claim to X that I should have paid to Y. X has unfairly gained from what belongs to Y. So to weed out all those kinds of things and ensure that I do what I need to do for somebody that is supposed to be receiving this payout, I need to go through all this, you know, that kind of thing. But as much as possible, it is all meant to ensure that the right thing is done and in an efficient manner as much as possible.
Okay, thank you for that elaboration. We're still talking claims, documentation, the claims process. We have a question from Miss Joyce Acheng. Can a clearing agent lodge a claim on behalf of their client?
On behalf of their client? Well, it is very possible for that to happen, and of course, a prudent claims person or insurer would want to actually be sure that the person who is lodging in this claim is actually acting on behalf of the owner of the goods. It is due diligence that I will need to do from my side when I'm processing your claim to confirm that I am not dealing with a person who is not representing the person I issued the policy to. So as I receive information from the client, of course, from the clearing agent, I will do some background check, or I will actually get confirmation from the client that this clearing agent is actually dealing on their behalf. Then I'll have the comfort to proceed and say, I can deal with this claim having come through the clearing agent.
Because from our experience, we've had people who have come to lodge in claims that are actually not the insured, and who would want to benefit under the policy.
Yes.
All right. Another question has come in here. At what point is a loss adjuster appointed? Is it immediately the loss has happened? Does the insurer take their time? At what point? Because remember, we are seated here somewhere in Kampala, and the goods are in Mombasa at the port. They're reported damaged. What time, how much time is spent before this loss adjuster actually goes on site, takes a look at these damaged items, and gets back to you with a report?
Okay. Yes. So when the loss has happened, like we mentioned earlier, they come in different magnitudes. They have different varied attributes and complexities. So depending on the information that you're receiving about a claim, then you make a judgment, you know, based on the information that you have. As much as possible, we require or we usually request our clients to give us as much information as possible at the onset, you know, so that it guides our decision making. You know, I will not be able to make a decision on a claim, say for example, that is reported. My consignment has damages. You know, somebody will send in that communication. I have noticed, or I have my consignment has damages or is involved in an accident along the way. Please deal or please assist. How do I go about this? You know, so we need some more information, and as much as possible, we need to know what probably is the estimated loss at that point in time. What kind of goods are we looking at, and things like that. This information will be able to guide somebody in order for them to be able to appoint somebody if it is required, or where actually their goods are. You know, somebody needs to be able to notify me and tell me these goods are at point X, and this is what, you know, it looks like. Some people will actually even send in pictures to be able to give you an appreciation of what has happened. So judging from the information that you have received, then you make an informed decision to say, okay, I will appoint this person, or I will appoint an assessor. And of course, it will help, that information will help somebody an insurer to know who to appoint, because like we mentioned, our service providers have different, areas of expertise. You know, I would want to know that somebody, if it is machinery that is coming in, I would probably be more interested in using the services of an engineer. You know, because this is his area, he's knowledgeable about this machinery, that kind of thing. So based on the information that comes in, the insurer or the person handling the claim will be able to make a decision and say, okay, I need to appoint an assessor on this one, and this is the kind of assessor that needs to be able to deal with this matter.
So you're emphasizing the point, and what we can bring forward here is that there is a need for cooperation.
Yes.
You cannot just report your claim or notify your claim and then disappear.
Yes.
You need to be part of this process,
Exactly.
so that you get a smooth sailing through it.
Yes.
Right? We have another question that is coming in here. There is property that is damaged, and by the time that the insured gets to know that it has been left abandoned, or by probably their agent, time has elapsed and they've not been able to preserve that property. Are they penalized in such instances?
Well, that's a very good question, and it is actually a requirement under the policy that you preserve these goods so that there is no further damage. What I do not want to do as the insurer dealing with your claim is to come in and say, okay, the goods were damaged up to level X, but then this extra I will not take care of because it basically arises out of a certain level of negligence that was exhibited by the owner of the goods.
But if the owner if the negligence was exhibited by the agent and not necessarily the owner, do you still?
Well, the agent is definitely working for the insurer or the insured. Sorry, apologies for that. So the agent is working for the insured. Somebody has been sent, given express instructions to act on someone else's behalf. So at that point in time, they are working on the instructions, based on the instructions that they received from their principal, who is the insured. So the expectation is that you will do everything possible to ensure that you preserve these goods so that they do not sustain further damage or loss. If, for example, there's the goods kept somewhere in a yard, somebody needs to take care to actually cover them with tarpaulin, for example, so that if they're in the open, the rain does not come, the rain does not fall on them, and of course the rainwater will damage them further, and then of course that will, blow the claim out of proportion. So as much as possible, it is a requirement for our clients to behave and conduct themselves like as if they are not insured. There is a tendency for people to think that, okay, I have insurance, so I can be reckless, or they'll take care of it. After all, I'm insured.
So I can abandon the property.
Yes, that kind of thing. So the property should not be abandoned. As much as possible, take care of it until the agent or somebody appointed by the insured actually the insurer comes in and takes charge of them, does the assessment and all that for the smooth running of the claim.
So we're also emphasizing the fact that there are still some duties that are expected of the claimant, right?
Claimant, yes.
And just to summarize that, you have to notify your insurer when the loss happens. You have to take all cautions, all steps to make sure that the property is preserved well. You have to notify your, the concerned parties, because it is important to notify like the Ports Authority. It is important to notify the shipper as you notify your insurer as well, because in this way you're able to preserve the rights of your insurer as they come to assess the loss and adjust it. And also we encourage you to work with the surveyors that are appointed, because in our experience there is no bad faith here.
Yes.
These are experts in their different fields, and they are here to help us adjust this loss and make sure we're paying out a fair settlement. As we conclude this, any parting shots?
Well, like I mentioned, I think this initiative is a very good one, and I believe this is a start of a very interesting journey ahead of us. We are here for you, our importers, our traders, and we are committed, and we have the experience, we have the expertise, we have the financial muscle capacity to deal with these claims as and when they come in. And of course, there is the customer aspect. You know, as much as we are paying the claim, we are also taking care of you as the customer. We want to build a relationship, and we are here for you. So basically, that is my message to the insuring public and our importers out there. Let's embrace this initiative. It is for us. It is basically to build what we have, like we mentioned, buy Uganda, build Uganda. Thank you very much.
Thank you, Ivan, for those final words. We are going to continue with this discussion. Follow us on the social media sites. We are available to continue this. We encourage the general public to continue and to take up the marine cargo insurance, because we realize and we've seen from experience how people's properties have really been protected, and they've been able to get that financial soft landing once this has happened. So from myself and Ivan, we are here to say thank you. Thank you for joining us on this platform, and over to you, Juliet.
1st July, all inbound cargo is required to have local marine cargo insurance. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your marine cargo insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And you have your policy sent to you via email. Mweze Mali. This message is brought to you by the Uganda Insurance Association. By Uganda, build Uganda. Effective 1st July, all inbound cargo is required to have local marine cargo insurance. Don't get caught off guard. Get your local marine cargo insurance quickly and with ease via www.uia.co.ug. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your marine cargo insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And just like that, you have your policy sent to you via email. Secure the goods with the local marine cargo insurance. Mweze Mali. This message is brought to you by the Uganda Insurance Association. By Uganda, build Uganda.
3, 2, 1.
Thank you very much, Isabella. I am very certain that you have opened the eyes of the importers, not just from obtaining a policy cover, but also knowing when to place a request for compensation in form of intimation, what documentations they have to submit, and when do other service providers come in place. I really thank you for that. And I want to emphasize to our listeners, our importers, kindly make sure that you have all the questions that have not been answered responded to. How do you do this? You can continue following us on our social media platform, because we are going to have those questions responded to. And other than that, you can still call the UIA, Uganda Insurance Association. We have a toll-free number, which is 0800-105050. Or you can send through an email through info@uia.co.ug. Thank you very much. And before we call it a day, we also have a very interesting topic that we want to delve into. And with me are the two ladies who have been moderating the sessions. It's my turn to ask them the questions. But before I do that, I want to encourage us to continue throwing through those questions, whether they are policy document related or claims related. You're welcome, Isabella and Nancy.
Thank you, Juliet.
Thank you for the time that you have taken us through in making sure that we understand this whole insurance detailed policy document and also the claims process. I want to believe that the participants or the listeners have appreciated, and for sure, for the questions that will come through, I hope I'm free to forward them to you so you can respond to them.
Yes.
Now, what is also important for us to realize is that we have intermediaries in the insurance space, and these are service providers, right?
Yes.
And apart from that, we also have, you kept mentioning the engineers and the service providers that you bring at the point of a claim, when there's a claim. And I felt it's important that we also help the importer understand who these people are and when do they come in place. Are they even licensed by the regulator? Is it in your mandate to appoint any one of them. So Nancy, who are intermediaries?
All right, thanks, Julie. And now to our dear importers and viewers out there, an intermediary is regulated by the Insurance Regulatory Authority. And when you have an intermediary, you're privileged to enjoy services from them, professional services. Now, when I say intermediary, it's a broad word. I'll just give examples of the different types of intermediaries that we have. We have brokers, we have agents, and then we have bank assurance agents. Now, these intermediaries are professional and they negotiate terms on behalf of the clients. So for this case scenario, they'll be negotiating terms on behalf of the importers, the insurance terms.
Thank you, Nancy. And actually, while she's mentioning the intermediaries, we also have the portal. As far as marine cargo insurance is concerned, it has become a distribution channel. Now, the brokers, the agents, the bank assurance agents are all distribution channels in the industry through which you can secure your cover for insurance policing. So they are experts, they are being trained. Before you actually get a license from the regulator, you must have certain qualifications. It's not just a walk-in, and the regulator has guidelines on that. So Isabella, when do you use these people?
Thank you, Julie. We tend to use, first of all, we use only licensed service providers that are licensed by our regulator, and the list of the licensed service providers, the public can find it available on the website for the Insurance Regulatory Authority. Anybody that we appoint will always appear on that list that the regulator has licensed for that particular year, and we'll always get them. So the point at which we appoint these loss adjusters or loss surveyors is at the point when a claim has been reported. Yes, and they assist us to quantify a loss that has happened, right? The loss can be, let's say, at the border with Uganda. So this person will travel there, will interact with the different witnesses that are there, will interact with the police, will look at the damaged goods, will interact again with the client, with their drivers, and try and get as much information as possible. Because like we earlier said, these are people who are experts in their field. They understand, let's say, how a consignment should have been packaged. Yeah, and if there was any loss that happened, they'll be able to separate what is damaged, what is not damaged, and give you a report. And based on that report, you'll be able to proceed and share with the client an offer. So they come in at a point when a claim is reported.
Wow, thank you very much. So are you saying that the amount that we usually see in a discharge voucher, I think you'll also explain what a discharge voucher is not determined by the insurance company? It's the service provider that you've appointed.
Thank you, Julie. The service provider that we appoint, let it be an engineer or any other person, right? For example, if it is an engineering risk, we'll always appoint an engineer who will be able to quantify for us the loss, right? Because the client themselves may not be able to tell the extent of damage. So these are people who are experienced, who may say, you know, we need to dismantle this unit to actually see if there is any additional damage. Okay. So based on that and the invoice that will be drawn up to repair or to replace, yeah, that is what will be presented, and the claim will be adjusted according to that invoice that is presented. Of course, taking into consideration the policy terms, like the policy excess that has to be applied. So that is how the claim gets to be adjusted.
So two things here. You've just mentioned policy excess. Maybe you'll throw some light on policy excess. But then also, at whose expense are these service providers? Because if you're going to get an engineer to go and inspect some sort of machinery, say in Mombasa or in China at the point of loading, whose expense? At whose expense? Who incurs the cost? Is it me, the importer, or it's the insurance company?
Thank you, Julie. That cost is always the cost of the insurer, because it is in their best interest to make sure that what they're paying is actually what is due to you and what is reasonable and fair. So we don't pass that cost on to our service provider, but I mean to the client, but rather it is a cost that we bear as we adjust this claim.
Okay, and the excess?
The excess, as defined in the policy, it is that portion which the client bears on their own before a claim is settled. I will give this with an example. Suppose the claim that you intimate or that you report is 1 million Uganda shillings, right? The policy says that you'll have to bear a 10% or a minimum of 100,000. So that means that your insurer will pay you 90% of the loss. Say in this example, it will be 900,000, and you, the client, will have to bear the 100,000 on your own. And just to go a bit further, what does that mean? That means also that any losses that are below 100,000 Uganda shillings will not be able to be admitted under your policy, because that is a cost that is, we believe you can bear on your own. But when it exceeds that, then we will come in and we'll share this risk, and we'll pay 90% of the risk, and you retain 10% of the risk. So that's how the policy excess comes in. And this is not, this is a worldwide practice that has come in, not something that is particular or specific to a particular insurer. It is embedded within our regulated terms that the regulator shares, that the regulator constantly monitors. And so the public should not fear, but rather embrace this policy deductible.
Thank you very much. So it's actually a global, it's not just unique to Uganda, it's a practice in the insurance space.
Yes,
we do not have control over that.
No, we don't have control.
So before we go further, I have Robert, who has sent through a question from YouTube. It's not related to intermediaries, but since Nancy, you're here, you can help us just answer it. It says, what percentage do you charge according to my pro forma invoice? Or if my goods cost $20,000 US, what percentage do you, is it supposed to pay for insurance?
All right, thank you, Julie, and thank you, Robert, for that question. Now, if you have a pro forma invoice or goods worth 20,000 that you want to import, Robert, if the 20,000 is the cost of goods, then I would also encourage you to add incidental costs. Incidental costs can be like the transport you're going to incur to ensure your goods move from, let's say, Mombasa to Uganda. Alternatively, if you're going to move your goods from China to Uganda, then you might as well ensure that the freight costs have been catered for. So that 20,000, if you load it with any incidental costs that you're going to incur, it may even be the import duty that you're going to pay, so that in case of any event, all those costs are compensated back to you. It's important that you cover all those costs. So how do we determine how much premium you pay? Then when you load, say, 10% on the 20,000, the goods now will be worth $22,000. So we get that $22,000, then apply a rate, a premium rate, depending on the type of goods that you're shipping in. Now, how do we determine the premium rate? Like earlier said or discussed, Uganda is a tariff market. We have guidelines that have been set by our regulator. So depending on the commodity that you're bringing, the rate is already predetermined. So we'll get that premium rate, apply it on the value of goods, then determine the payable premium. So that's how we determine your payable premium, Robert. If we've not done justice to your query, don't hesitate to repost the query so that we can do justice to it. Thank you. Back to you, Julie.
Thank you, Nancy. And of course, the calculation bit has to be practical.
Yeah.
But Robert, what is key here is the rates are not something that we sit and agree on. It's something that we have a guide below which no insurance company is mandated to charge. But depending on what you bring through, you could enjoy the minimum, but all that depends on the type of input that you're bringing through. And there are guidelines on that. We are really regulated. Our regulator has the customer at heart. He does not want to see that a customer has been cheated, because you are not an expert in this, so you will go with what has been given. So the regulations are to ensure fairness on both parties. So back to our discussion on intermediary. So when do you consider an intermediary? When does an importer consider the service of an intermediary? Because you said it's a distribution channel. Yes. I can be approached by a broker. I can be approached by an agent. I can be approached by a bank assurance officer. when do I can also choose to go direct to an insurance company.
Yeah,
So when do I choose to use these people? Can you give the importer some light?
All right, to the importer out there, the moment you think of transporting your goods, if you have an intermediary in place already, then it's important that you engage them at that point. When you're engaging your supplier for the goods, make sure you get a quotation, a premium quotation from your intermediary. It could be a broker, it could be an agent, it could be the bank assurance agent, or you could even come directly to the different insurance companies. So at that point, when you're interested in purchasing your different commodities, ensure as you engage your supplier, engage your intermediary so that you understand or appreciate the costs that you're going to incur to ensure your commodity is transported from wherever you're getting it from right to your premises. So Julie, at the point when you want to purchase the goods, it's important that you engage the intermediary because they need to walk the journey with you from the start so that you account for that insurance component. Otherwise, if you don't take note of the insurance component, then you'll be disorganized when the goods are already in transit.
So Nancy, what's the difference with broker, agent, the bank assurance agent? So what's the difference amongst the three? For me to decide that I should use a broker. Why would I use a broker? Why would I use an agent? And why would I use a bank assurance officer? Under what circumstances would the other favor the other? Because I know it's a competitive environment, they're all doing the same thing, but I should be able to get what I think will work for me. So as a confused importer, wondering, so how do I know that I'm picking a right channel?
All right. Thank you, Julie, for putting me on the spot on this one. I'll plead the fifth, but I'll still throw more light on how you'll choose who to use or who not to use. Like I said, I've been put on the spot. Now, for our importers out there, I'll just give you the difference between the different intermediaries. Then you will be the ones to choose who to work with. Now, what is the difference between a broker, a bank assurance agent, and an agent? An agent is tied to a specific insurance company. What do I mean? When the regulator is licensing this agent, they will tie them to say UAP Old Mutual Insurance Uganda Limited. So they will definitely operate with only UAP Old Mutual Uganda Insurance Limited. And then for a broker, these are professionals who have been licensed to operate with different partners. Allow me also speak on behalf of the brokers. They are licensed to work with the different partners, meaning if I approach them as an importer, they can get terms on my behalf from different companies. They can get from UAP, they can get from Sanlam, they can get from CIC, they can get from wherever they feel like the people will, or the partners will offer the services the client is looking out for. So those are the two differences, the differences between the two agents and the brokers. So to the importer out there, it's up to you to come out and determine who to work with, or you can as well come and work directly. Then for a bank assurance agent out there, they also operate like brokers. They are licensed to source terms on behalf of their clients from any partner, any insurance or licensed insurance company to ensure they deliver service to their clients. So it's only the component of how many insurance agents, how many insurers that you work with vis-a-vis the agent working with only a tied insurance company. So that's the difference, Julie.
Okay, thank you, Nancy. So what you're saying is a broker is an independent company. A broker is an independent company, fully functional, licensed to do business that they are doing.
Yes.
While agents are sort of marketeers of an insurance company.
Yes, yes.
Okay, so clearly our importer should be able to see the difference. One has a legal obligation to ensure that they do what they do at their best, and that's a broker. The rest, they work as the insurance company, marketing.
They represent the
So Isabella, thank you, Nancy. So what value do these intermediaries add when as far as claims intimation is concerned? And why I'm asking this is if a claim that comes through an agent and a claim that comes directly to an insurance company and the one that comes through a broker, I'm sure you have an experience on which one is easier to deal with, okay? So, and then also what challenges do they pose? I hope I'm not doing injustice to like Nancy has said, but I also want us to appreciate the value that these intermediaries bring on board when there's a claim, especially marine cargo insurance, because we know for the fact that when I have any intermediary, because these intermediaries are in between, they're go-betweens between a client and the agent. So meaning they're representing the interest of a client and an insurance company. Yes. So their involvement in the claims process is also very important for us to know, because we tend to see them more at the point of buying, securing a policy or an insurance certificate for a client. So we also want to help us appreciate their value add as far as claims is concerned.
Thank you, Julie, for that. The value that the brokers or the agents bring into a claim, while it has been reported, there are several, but amongst them is that you have a professional broker who is well versed, who understands the policy that was issued, who understands the circumstances of the claim, and they're able to communicate appropriately to the customer, because we've had instances where the customer may not believe the insurer, right? Because maybe for one reason or another, they probably think that they're not getting the adequate settlement of their claim. So many times the brokers will come in and explain some of these terms that appear to be very technical. They break it down for their customer. They're able to, move around and ensure the client's claim is being progressed, because we know that as you deal in your business, you may not have time for somebody to constantly follow up on your claim. So these brokers come in to ensure that your claim is actually getting the due attention, and the amount that is actually being paid is reasonable and is expected. So that is where they come in to add the value. And there are some things you might, miss out, and the broker will say there is this that we need to include. And so that is how they come in, and many times customers are satisfied. It's the same thing for agents as well. In as much as they are working on behalf of the insurance company, they are still looking out for the interests of their client and to make sure that the client's claim is paid within the time that we say we will pay it. So that is where they come and give the value add.
Oh, thank you. And I know for the fact that agents, the advantage an agent has over a company is that for them, as long as they have transport, they run to the client to help them out,
yes.
Which may not be the case for the broker, especially if they are administrative clearances that the person handling the claim is concerned. But what is key here is they all do the professional work they're supposed to do, yes. Because as long as you have a license, because all of them are licensed to do what they have to do. So the only challenge they have before them is to give their best and show the value of using them as far as the client is concerned, in this case an importer. So we want to encourage our importers, kindly, if you can, get hold of any of these intermediaries. They will add value to you so that you focus on your key business, concerns on your business, importing and ensuring that your business continue. Let the intermediary be the one to run around with your insurance issues, because at the end of the day, it's very hectic, especially when a claims comes through, and yet you must continue in business. So I also want to make sure that I emphasize, in far as marine cargo is concerned, we have a portal through which you can secure your cover in a convenient manner wherever you are. But this does not mean that the other intermediaries are not relevant. They are still relevant. We are only trying to ensure that there is no importer who has an excuse that they cannot access any of the insurance companies. But if you can't, kindly log into our website. There's a provision for marine cargo insurance through which you can secure your policy immediately. These policies will take you through, this policy will be sent to your email address that you will have input at the time when you're filling in the proposal form. So kindly secure your cover with us and ensure that your goods or imports are in transit while you have a peace of mind, not worried about any loss or damage, because even if it happens, these are things which are beyond our control. Even if it happens, you would have financial Our sincere apology for that technical glitch. But finally, Nancy, before we get done with the webinar, do agents, brokers, intermediaries negotiate contracts on behalf of the importers?
Thank you, Julie. Yes, all intermediaries negotiate contracts on behalf of their importers and our mutual clients, be it the bank assurance agents. So all intermediaries, except of course the portal that has been brought on board, but all intermediaries, yes, can negotiate contracts on behalf of their clients.
And I think that's because they're all professionals.
Yes.
By the time you're licensed by a regulator, then you're good at your game.
Yes.
So our importers, we want to encourage you again, kindly get services from any of these distribution channels because they will make your life easier and focus your risks very well to advise you on how best to place your cover. And this is not just for marine cargo insurance, also the other covers that you may want to take on as far as insurance is concerned. And before we call the webinar to an end, I also want to encourage us that we only have 20 licensed insurance companies that can offer marine cargo insurance policy. Kindly get to the IRA website, the Insurance Regulatory Authority website, to ensure that you're dealing with the right insurance company. And then also you can come to the Uganda Insurance Association website because these are our members. We have them as well in our website. So don't get challenged with someone who is a fake. Get to the website and get the right insurance companies to deal with. And then also, in case you've taken on a policy or there is a claim and you feel you're not being serviced, at the regulator, there is a complaints desk through which you can go and submit your claim or your concern or your frustration or your complaint. The regulator is able to ensure that whatever has not been agreed upon between you and the insurer is dealt with. And just to check on what is happening in the chat before we go, and I want to encourage us to continue bringing through. We have Emmanuel, thank you so much for throwing in a chat. I have a scenario whereby the importer has a different buyer on the bill of lading. The confusion is who is to pay the premium? Can you clarify? The person who pays the premium, Nancy, who is supposed to pay the premium? We have importers who come with different, the issue I think on groupage where they are consolidators, cargo consolidators. They just give space to these importers. So many of you are in there in the bill of lading. So who pays for the insurance?
All right. Thank you, Julie, and to Samuel who raised that query. Now, when you import your goods on a consolidated arrangement or groupage arrangement, the person who is giving you space in that container definitely will charge you a fee. Now, sometimes, depending on the agreement you have with the person bringing those goods on your behalf, they can ask you to pay insurance for yourself or they pay insurance on your behalf. Now, given the new arrangement that has come on board, the new regulations, it won't be business as usual, where the owner of the container pays insurance or clears your goods on your behalf. The owner of the goods, the commercial invoice, if it's in the names of Nancy, and I've just been maybe given space in Julie's container, I have to clear the goods as Nancy, meaning I have to ensure I pay my own premium and purchase my own insurance. So I hope that clarifies Samuel's query.
Certainly it does. Sabila, you want to supplement on that? When it comes to a claim?
When it comes to a claim, each claim is assessed individually. So the loss that is suffered by that particular person is looked at individually and it's adjusted and then a settlement is made thereafter.
And settled to the owner of the policy?
Yeah.
Okay, so thank you very much, team. I want to also keep emphasizing to follow this discussion through our platform, the media platforms, and submit through your questions. Even after we are done, kindly send through those questions in the available platform so that we are able to address. And also what I want to emphasize is that we at Uganda Insurance Association, this is something that we have started and are willing to take the journey with you. We will work with you importers and we are open to recommendations, proposals, on how best to arrange these marine policies. We will do what we can within our mandate to ensure that the service, the protection that we are guaranteeing is serving its purpose. And then also, any insurance company can be approached for any of these policies. Please do not just restrict yourself to the UIA. You can go to any insurance company that I have noted. There are only 20 in Uganda, and you can get to know who exactly they are through the regulator's website and the Uganda Insurance Association website. Nancy, any parting shots?
Well, for me, it's to thank dear listeners and importers, viewers. Thank you for sparing your time to be part of this first edition webinar. Make sure you remember to secure protection for your goods by purchasing marine cargo insurance. Tell a friend to tell a friend. Thank you.
Thank you, Nancy. Isabella?
Thank you, Julie. We do encourage the importers out there to purchase this marine cargo insurance. It goes a long way in offsetting any financial losses that you may incur, and the claims are actually paid, those that fall within the policy. We have, we thank our regulator who is pushing this, Uganda Revenue Authority, the Uganda Insurers Association. Please purchase and we build Uganda together.
Thank you very much. Robert Mulemekan would like to get our contact. I will share with you via the chat so the others can also benefit. Our toll-free number. Kindly feel free to call us during working hours, definitely, from 8 a.m. to 5, because then it is not going to be attended to because they are landlines. I want to extend our sincere gratitude to everyone who made it a point to be part of this webinar. For us, it is a milestone in ensuring that all the importers in Uganda appreciate the importance of marine cargo insurance. And definitely, my CEO is not with us, but he asked me to appreciate every one of you for making it a point and give an assurance that we are here to serve you, and we will definitely give you the service that we can. The best that we can do together is that we have to all win in this. For us as the association, we have we've come up with a slogan that we are not making you buy this because it is a directive. No, we are interested in you understanding the importance of insurance, because we are not just interested in marine cargo insurance, but we're also interested in you securing other insurance policies, because risk is part of us, and if you don't secure it, then you're exposed. So we need to walk this journey of insurance together, even as we started off with marine cargo. For more questions, for more clarification, please feel free to reach us through our toll-free numbers. You can reach us through our telephone, landline numbers, or email address through info@uia.co.ug. And of course, I will not leave without appreciating our key partners in this campaign. That is, of course, the mighty IRA, our regulator, who makes it easy and possible for us to make this service a reality to the importers. Thank you so much through Alhaj Kaduna Luvega. Thank you so much, CEO. I also want to extend our gratitude to URA, Uganda Revenue Authority, who has made it even easier for us to ensure that our importers secure this, because then, apart from just paying taxes, we also want to make sure that you bring in your import with peace. And so URA, thank you for giving the open arm and being the implementing partner in this case. And then, of course, we want to thank the leadership of Uganda Insurance Association, right from our chairman and the colleagues at the Secretariat. Thank you so much for the support that you gave the Secretariat to be able to run this campaign, even as we started off, until it peaks. Definitely, I will not forget to thank our dear panelists. Nancy, thank you very much. Isabella, thank you. Richard, thank you. Ivan, thank you for your time. Thank you very much. Thank you very much. We can never thank you enough. But we pray that even as this has been taken on, more concerns will come through seeking for clarification from the UIA. It's unfortunate that we have to call this to an end, but the conversations will continue. Thank you very much once again, and have a good afternoon. Bye-bye.
1st July, all inbound Cargo is required to have local marine cargo insurance. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your Marine Cargo Insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And you have your policy sent to you via email. Mweze Mali. This message is brought to you by the Uganda Insurance Association. By Uganda, Build Uganda. Effective 1st July, all inbound cargo is required to have local marine cargo insurance. Don't get caught off guard. Get your local marine cargo insurance quickly and with ease via www.uia.co.ug. Simply follow the following steps. Go to www.uia.co.ug, select Marine Cargo Insurance. Tap or click on Marine Cargo and Goods in Transit, fill in the relevant particulars, submit to get your Marine Cargo Insurance quote, and then proceed to pay using either Centenary Bank or mobile money. And just like that, you have your policy sent to you via email. Secure the goods with the local marine cargo insurance. Mweze Mali. This message is brought to you by the Uganda Insurance Association. By Uganda, Build Uganda.